You are listening to Revealing Real Estate Podcast, where we dive into getting over your fear of taking risk in real estate and making money while you sleep. I'm Nico Pedizano, your host and real estate guru with over 20 years of experience. It's time to get real. All right, so I want to talk about today ways of when sometimes real estate markets for investors don't work to their benefit, and you know there's a lot of cash flow negative situations that are currently happening within the market because of interest rates. There's many times where I believe that there are situations where people will need to pivot. What I'm finding is especially in the real estate game, investors right now are sitting liquid with cash ready for this market when it does start to turn, to jump on certain opportunities. And I believe that once interest rates will start going down, whenever that may be, I believe this market is going to continuously surge, and we're going to see jumps anywhere between 10 to 15% again. So there's going to be a lot of opportunities that are going to be coming, and people that haven't invested before within the real estate game, maybe on the flip side or renovation side with contractors, you're going to be ready for the next one. So definitely I would be prepared for yourself. But in the meantime, I thought it was important that in these markets, a lot of things that I like to do is pivot into certain different scenarios where if I'm not producing the amount of income that I would normally produce in the real estate game, then I would pivot to try to get maybe more into financial wealth building through many different investments, maybe be stocks or mutual funds, bonds, gold, silver, oil, things of that nature. And I wanted to bring somebody in who's been on this show before, and I want to welcome him back. He is the branch manager at the PFSL Investments Limited. He's got more than 20 years of diverse experience with financial services, client care, sales channels, market initiatives, project implementation, and delivery. Please welcome to the show, Hem Bhatt. Hem, welcome back.
Thank you, Nick. Thank you for having me again.
Hey, no problem. It was a pleasure. I wanted to get you back on the show, as I explained, because I know that you come with such knowledge and especially within your industry and your market. You are very diverse. You offer so many different products. I wanted to kind of really get our viewers to make an understanding that there are still opportunities right now within the market where you can start growing your investment portfolio and still start getting some good returns. You know, today in the banks, they're offering, a 6%, GIC, which we haven't seen in years. It was always hovering between 2 and 3%. So a lot of people wouldn't keep their money within the GIC because they reinvested within the real estate market because there was better gains in the real estate market. When the interest rates are like this, banks are offering better rates on GICs and so forth. So I wanted to talk a little bit about that aspect of the market, what you're seeing, what's happening within the financial sector. But maybe you can just talk a little bit about yourself first and just kind of your story with PFSL Investments, and you can kind of just share your knowledge so people understand your experience of what you're talking about.
Right, certainly. So let me just start off from here that I've not always worked in the financial services industry. I did my graduation. I was doing my master's from York, working in the projects management. And Bill, at that point, they were hiring for customer service reps. And I thought, let me just give it a shot. And I started working with them. Now, even though I was in school, and even after the school, I always had that concept very clear in my head that when it comes to finances, you have to always play smart. You have to always think differently than the most average people would think. And I think it also came from my dad, who was a private lender. So he also taught many concepts in the very early stage of my life, my brother's life. And that's what pretty much we were just living with. And I always had a desire to learn more about the finances, learn more about the financial services. I always wanted to educate myself as well. So we were constantly looking for some sort of opportunity where we can actually not only learn, but then we can also get professional licenses. And that's where I landed up with. So me and my wife, we both got the licenses. We both started working. And since then, the whole dynamic has changed in terms of the way we think, the way we live, the way we educate people. So not only we meet with the individuals and then we expand them on different financial services avenues, we literally take the approach where we talk to them about the financial literacy, why it is important, because those are the concepts we never learn in school. And in my opinion, we should have learned in school, obviously, because we learn math, history, science for many number of years. And how many times today we are using history on a daily basis, right?
Yeah.
So that's why it's very important. But more than that, I also do different seminars as well at professional organizations and where employees attend my seminars. And then all my talk is around the concepts and strategies and how you can think differently, how you can get ahead financially and so forth.
Amazing.
So that's what pretty much I can say that that's where I started from. And this is where I am today.
Tell me a little bit about your company. I know you guys are very diverse in offering many different products, from insurance to mutual funds to wills, and the list goes on and on. Mortgages.
Yeah.
So maybe just tell us a little about your company, what kind of services you offer.
So our company was originally founded back in 1977. So it's been almost, 45, 47 years now. And since then, the company is in market. And in Canada, the company came back in 1986. And we have been offering so many different solutions to our client, depending on what they benefit from. So our goal is to cater all different services. We are just like a one-stop shop supermarket with the home delivery. That's our goal. And that's what we do, that not only when we meet with them, our first goal is to identify where they stand today. Okay. And then based on the answers I get, that's how I basically just provide them different directions as to what they can do. And currently we have over 130,000 licensed people who work for our company. And we have branches all across Canada, US. And we are also a public company. It's on New York Stock Exchange, and this is not a solicitation to buy the stocks, but we are on a New York Stock Exchange, and our stock prices are amazing, and we have millions of clients in all lines of business, and since last so many years.
Yeah, I know that you train and mentor young, inspiring youth that want to kind of get into a professional financial sector of it, and you guys provide that type of training and mentorship?
That is correct, because we are also approved course provider by Ministry of Finance. So anyone who wants to get their licenses to work in the industry, we basically just do the application for them in a way that they have to qualify to work with us on a part-time or full-time basis. And then we just provide the course because we can teach that course. And then they're fully licensed to work in the industry.
All right, that's great. So you definitely got the experience behind you, and I think the viewers or the listeners that are going to be listening to the show understand that we're going to be dealing with somebody who's reputable and who's been around for some time. And I'm sure you've made a lot of your clients a lot of money, and not just making them money, but also protected them in many ways to make sure that, whether through life insurance or their investments are protected, whether RSPs, RESPs, you offer many different types of products. And if somebody wants to reach out to Hem, definitely just reach out to us or DM us, and then at the end of the show, we'll get Hem to post out his information where you can reach him. But Hem, right now, for me, what's important is helping and educating people different ways to generate or earn income, right? Because I believe, the rich get richer with many different streams of revenue, and it's not just having one pillar within your portfolio that's going to generate you income or generate you that financial wealth for a good, wonderful retirement. I believe diversifying and having a different portfolio because of different market trends, right? Whether, sometimes on, stock markets are really not doing very well, or mutual funds are not really performing the way we want. Some people would then have their real estate portfolio actually perform a lot better. In today's times, I'm sure real estate portfolios are not generating what they want. So sometimes they'll pivot and go into the financial sectors. So can you explain maybe to our listeners different ways for people to generate income through your services?
Okay, so before I get into this, this is normally always say to my clients as well that there are 4 ways to earn an income in society. And I don't know if you have read the book Rich Dad Poor Dad.
Many times.
Right? So Robert Kiyosaki has very well explained this concept in his book. So there is one way you can earn an income. You work as an employee, right? So employee is completely based on the position you work at. Mm-hmm. So I think I'm the prime example of it for this whole quadrant, which he has talked about in his book. So I was an employee, and my salary was completely based on my position. So regardless of how many hours I used to work, it doesn't matter. I used to work as a senior project manager. I worked like crazy hours, sometimes 10 hours a day, 12 hours a day, but the salary is the same. The number 2 way is people can become self-employed. And being a self-employed means that you specialized into something and then you work for that particular trade, and that's how you make money. Mm-hmm. The only caveat with that is when you make money like that and that individual becomes sick or they go on vacation for a longer period of time, their income stops. Number 3 ways is the becoming a business owner, where you own something which is a system, and that system is going to run behind the scene with or without you. Okay. So you can have any sort of business, and then that business is going to run, bring the revenue in and day out. And number 4 way is an investor. So that's when now you invest your money in a different way. And I'm not saying specifically that there's only one way to invest money. You can invest money whatever way you want, because that concept is also based on completely diversifying your entire asset.
Right.
So I would not recommend that, you just put your investment only here and not anywhere else. It could be anywhere and everywhere, depending on, again, the situation.
Diversification.
Exactly.
Right?
Diversification is one of the concepts. Another concept I would say is dollar cost averaging. So people generally wait until the market goes on the top, and they just think that, well, that's the right time to buy anything they want to buy, but that's not true. The example is that when we go for grocery shopping, right? And let's say if I'm buying can of tomatoes, which is always available for $1 at the grocery store, but then one day I show up and then it is on sale. So let's say they are selling 2 for 1, right? So 2 for $1, obviously I'm just going to stock up. So this exact concept works when it comes to dollar cost averaging, because I will end up buying more units than someone always who is buying at the regular price.
Right.
Right. And that's, I think, the most people need to understand, that market is not going, it doesn't look like a straight line. Like, you are a real estate expert, so you also know this. When you look at the home prices or the housing market, whatever it is, it's never a straight line.
Never,
right?
No. Yep.
So that's what people need to know, that it's not the time to not put money in, or it is not the time to pull the money out if you already have invested. It is time to stay invested.
Correct.
Okay. So
I agree.
Right. So that's the concept. And the number 3 concept, which is very straightforward, is the discipline. So these 3 Ds are very important: diversification, dollar cost averaging, and being disciplined. Because being disciplined means you are very disciplined and investing money no matter what happens to the market. People get so panicked. Like when it comes to investing, for example, and you have already witnessed this as well, that have you heard of that before? Like when you want to invest, invest with your head and not with the headlines.
Right. Correct.
Right.
Do opposite of the headlines.
Exactly.
Yes.
Because people get panicked. People get panicked by.
Well, I think what makes people really not want to make those moving forward parts of investing is the fear. Fear is everything.
Yes.
And that's what people get really stuck with.
That is so true because people get panicked just by listening to others, by listening to the social media. Fortunately, unfortunately, we have so many informations available nowadays, different resources and so forth. So people really need to identify what's in it for me, whatever I'm listening to or whatever I'm reading to, right? And that's how they can make the informed decision. Because when it comes to finances, whether they want to buy a house or whether they want to invest money in a mutual fund or whether they want to buy a car or whatever the goals might be, or moving from the smaller home to bigger home or going on vacation, I think it is all based on a very simple concept that, you know what, you need to know your stuff and everyone's situation is different. So if your friend, your family has done something, most likely it is not for you because you have to take a different approach.
Right.
Because it's a customized approach. Like
Correct.
my shirt won't fit your size, right? And so that's what it is. So
Right.
so that's how everyone should look at it, and it's very dynamic, very broad spectrum. And I think most people, in my experience, ever since I've been working in this industry, in sitting with so many clients, what I have learned and realized that most people do not have the direction in terms of whatever they want to do versus what they should do, right? And then that's why I think most people are lacking. So there is literally a need for the financial literacy, I must say that.
Enjoying this episode? Subscribe to our channel and leave us a comment down below to let us know what you want to learn next. Make sure you're following our Instagram and TikTok to stay up to date on our new episodes every Friday.
Which is great, and your services are wonderful, and providing that education, that knowledge base is important. And I think definitely, within the youth, younger education, it should be taught into high schools. I know my daughter Malin, she did a business course last year. Definitely worked with her a lot on that, and making understand the business fundamentals of just the concept of money and how money works. We're working on, even opening up at a very young age a bank account and having her earn the income to put in there to understand the savings, because those essential components of understanding the flow of money is very important at the very early on stages, which will help her eventually graduate to the next level of investing and diversifying, so that she can hopefully one day follow in her mother's footsteps. I want to say her father's footsteps, but her mother's footsteps, where she can not have any issues when it comes to business financing. And that's my goal, because being an entrepreneurship is very important to myself. It's dear in my heart. It's embedded within my system. And I think, listen, being an entrepreneur is not for everybody.
Yeah.
And I respect that. I believe in making sure within life you strive for the happiness and the joy. So that's what most importantly is important, and going to a workplace where you can be valued and show your and you're appreciated for the hard work that you do, goes a long way. And the stress that comes to becoming an entrepreneur and dealing with money flow coming in and out is very difficult. So what would you say to somebody right now within these markets that maybe have a little nest egg put aside, that they would want to kind of invest into it, but not be so at a level where there's too much risk involved into that decision that they're going to make for the investment? What would you recommend at this point in time for somebody?
Generally, this is another concept which I teach to my clients as well, that you should always think about 3 different types of accounts. Okay, so there is one account which is the short-term account, which could be for anything, like you have short-term goals in a way that, let's say you're saving this money for something. You're probably saving this money to buy a car or to buy a house or to buy whatever the case might be. So that has to go in the short term. The mid-term, or I would say just to kind of something you're planned for, which is also can apply for buying a house or something. Let's say you're planning for a wedding, or let's say you want to renovate your basement, whatever the case might be, which is something you already have it planned for. I think that's where the focus should be, to save, invest money in those type of accounts. And the wealth building accounts are just for the retirement. So that's something you want to build for your retirement in a way that that money you are investing and you're not using it at all until you're fully retired. We have those investments available in form of all different types, RRSPs and TFSA, and we have RESP for kids. Now the government has announced this new one, which is the first home savings account. That is also good for clients. In my opinion, it's a very good program. If someone really wants to take an advantage, like for someone like your daughter who will be 18 very soon,
Yes.
and she can also start implementing this because it allows individuals to put $8,000 per year in that account, and then following year when they file the tax return, they can actually get the tax benefit.
Right.
So this is a hybrid account which works like an RRSP and the TFSA. And then eventually they can use, once they reach to that 40,000 limit of that account, they can use towards the down payment of the house, right? So what I'm trying to say here is, depending on the family, the husband, wife, what they are doing, what they're working, their age, their risk level, their kids, their age, what they want to become, what the goals are for the kids. That's how different things can be recommended. There are mutual funds available as well through different portfolios, and they're offered by our partners like AGF Investments and McKinsey Investments. And those strategies are put in place depending on what's the purpose of saving this money. Because not everyone's money can go into same kind of investment. It has to be diversified. It has to be like a different way, different avenues can be used. And then that's how people can make their own choices. And when we recommend anything to our client, it is not just based on what I feel it's correct. It is also based on what I've already talked to them about and based on their comfort level. So they also need to understand that, you know, what I'm doing, why I'm doing it. So that's how they can continue with the plan. And we need that excitement when they start to the finish. So we don't want to lose the excitement just because now the market is fluctuating and then things are happening and they hear different things from different people. That's not the way it should be. So that's how we recommend different things. And then one of the important rule I teach to our clients is the rule of 72. So rule of 72 is also something which basically is simple calculation about how much money you can invest today and how much time it will take to double your money. And it's a finance rule. So every single institutions we know of, including banks and everybody else, they all work based on this rule. And the easiest way you can work on this rule is, let's say if I have $10,000 and I'm investing my $10,000 where I'm earning 3% average rate of return, I take 72, I divide that into 3, my answer is 24. So I invest $10,000 today, it stays invested, it will be $20,000 in next 24 years. So now if let's say you invest 10,000 and you are earning 6% average rate of return, you take 72 divided into 6, your answer is 12. Your doubling period is faster than mine, right? Now let's say Angie, who takes this money, 10,000, or let's say now your daughter who takes the 10,000, whatever it is, and now she invests that into with 12% return, her doubling period is every 6 years.
Right. So it's gonna accumulate a lot quicker.
Exactly. So I always ask this question to my client, okay, this rule is great. It's incredible. This is something we should have learned in school, right? Everything is great, but we did not. You know that now. So real question is that how many doubling periods you have left in your life? Because when you're in 20s, yes, obviously you have more than when you're in 40s and 50s.
Well, yes, you should have more cash flow for sure.
Right. So that's the idea of investing money, and not only investing but stay invested, right? For example, you know about the real estate. So I mean, you can also say
It's
this.
what I know. A majority of my investments do come through a real estate portfolio.
Right.
I'm very limited and diversified in it into many other sectors for sure, just because that I eat, sleep, and breathe real estate, right? So you have different revenue streams that'll come from my sector, just as you would within your sector, right? And I'm sure that you probably have different sources of generating income that'll be established, and I do that too as well. But again, continuously growing and diversifying myself is important, because sometimes real estate is not going to generate what it's going to need to generate for me at certain sectors of the market. Do I believe in the long-term longevity of it, or the growth of that? I don't think myself personally, but I'm biased 100%, is that I don't think there's anything better.
Yeah.
Right. And you may have a difference of an opinion on it just because you know what you know and you study. And that's why having you on the show is to see that there are always two sides of a spectrum when it comes to investing. And that's okay. Right. There's different ways of doing it. And people have different risk tolerance. People have different fears. And different strategies for sure. And I think essentially you got to feel what's right for you and where you are.
That is what I was going to say, that, any investment is good as long as it is working for you, and as long as, more importantly, you understand how it works.
Yes.
So that's the thing that, well, like, for example, and people also need to understand that there is no shortcut when you're investing money. So you have to be just patient with everything. For example, the house which we sold, which you helped us out, this was 6 years ago in Woodbridge, and now we're in Kleinberg. Let's say when I bought the Kleinberg house and I sold it in a year, I know that it was not going to make me money, right? I had to stay in the house. This exact concept applies for the investment. You are in it and you have to stay in it until you see that, okay, now it is working for you. When the real estate market was extremely high, I think last year until almost January, February, right? People still think that, what, I should have sold my house back then because I would have made a whole lot of money, okay, which is great. But now they're thinking that, okay, now if I sell my house now, then this is what I'm getting. But real question is, do you really want to sell your house? Right?
Yeah.
So it doesn't matter what happens with the real estate market and what happens with the value of my house today. I'm not selling, so why do I even bother?
Correct. Right? You only a wise man once said to me, you only lose money when you sell.
That's it.
Yeah.
So that's what people need to get in their head, that, this is something, a very simple concept, that if I'm not looking into buy something or sell something, regardless of what happens to the market,
it doesn't really make a
difference. It's irrelevant. It 100%. Doesn't make a difference to me.
And I think what you mean by that too, and just to kind of give you my 2 cents on that, is, a lot of people come to me, especially when the market is down, and there is some financial strains that they're obviously dealing with because, they're cash flow negative, and back in the day they were positive through that. But if you bought an investment property, 5 years ago, 10 years ago, I think you're always going to be in the green regardless of the markets, because I don't see major shifts coming down where we're going to see a 30-40% drop in the market. We're going to see, increments of 5%, 10%, so forth. And I think that's what the Bank of Canada is trying to do right now, is take control of the market. So what they've done is got rid of all these investors, to get these investors to put product out on the market, right? To make it unsustainable for them, to make it unaffordable. These are my beliefs. This is my opinion on it. I think part of it is working because inventory is starting to rise. We're seeing a bigger flux of homes become available to choose from for buyers. There are still people qualifying, but the buyers that are qualifying right now are the people that are end users. Somebody who has an interest to move into the house, whether they want to upsize or downsize. That's what your market is. There's still a good market for first-time home buyers right now, because I know that interest rates are high, but they're going to stay within their market that's affordable, or what they get approved for. With the investment side of things, I think it becomes a different game. And I think right now, those investors, the smart investors, are ready to, start jumping on things and thriving. And most, the rich only get richer based on buying in the bottom of the market, not at the top of the market. So they're going to look at the next opportunities to start flourishing on this, right? And I believe that it is something, and it's important that we share that. Now, there's some short-term gains in real estate, but I believe if you're investing in the real estate game, it has to be a long-term hold, right? For myself, unless you're in the Airbnb business or you're a renovator, you're fixing and flipping, you're doing wholesaling, things of that particular nature. In your sector, in your business, is there ways to make short-term income, or is everything set up where you are looking at this in the long haul?
I think it goes hand in hand what you just said about the real estate, that it's always for the long haul, right? And same rule applies for the investment as well. Unless you just want to like invest for a very short term, you don't want to take a risk, you don't want to lose your capital. Yes, there are options available, but that doesn't give you much. If your intention is to grow the money, and if your intention is to see a whole lot of money in 6 months, 3 months, it doesn't happen. And I'm not here to give guarantee to anybody about how your investment will work, because nobody knows the market. Just like any other market, like real estate market, nobody knows about it. All I can say is when you invest money, and if the intention is very clear from the very beginning about why am I investing this money and when do I need this money, then it works. And I say to my clients that when you are investing money in a wealth building account, which is meant for your retirement, and let's say you have started doing it based on the plan which we have discussed up front, which is a financial needs analysis. Now, let's say a year later, 2 years later, you come to me because you are in need of some sort of money, because you want to go on vacation or you want to fix something in your house. That defeats the purpose. It will break the whole chain, and then it's not going to look like what we had discussed a year ago, right? So, fortunately, my clients understand that.
And if somebody has that fear, how can we, or what should we say, to protect that income from coming in? Like, what can somebody do to have income protection?
So
I'm not saying you have to provide a guarantee on it, right? I just, somebody should feel protected that, hey, I invest today, in 20 years, I'm going to earn this much. In 30 years, when I retire, I'm going to earn this much, and so forth. Is there anything out there for them?
So when we show them the wealth building strategies, which is meant for the long term, we can always talk about the history, right? So let's say someone comes to you, and then let's say it's me, okay? I want to buy a house in Nobleton, for example. And if I say to you, Nick, what do you think that if I buy a house today, what would be it worth like 3, 5, 10 years down the road? You can't give me an answer, right? But what you can say is, Nico, I can show you the last 10 years and then how that market has performed.
Correct.
Right? Or last 15 years or last
Yes.
20 years. This exact same thing what we talk about. What I can say is how market has performed in the last 10, 15, 20 years. And we show it to them, depending on what portfolio they are interested in or what is going to work for them. And then that's how we project everything that, well, this is something could happen in the next 5, 10 years.
Yes.
Right? Because again, like I said previously, I'm not here to give guarantee to anybody that, you put X amount of dollars and you will have this amount of dollars guaranteed. There is no such thing, right? Unless, like you mentioned, GICs.
You're able to show patterns and graphs to show that, look, this has been the growth for the past 5 years. Look at where the real estate market was 5 years ago, 10 years ago, 15 years ago, 20 years ago. And you can see that graph will go like this, and then just continue to rise.
And real estate market, for example, it depends on the city you want to buy a house in, right? So, for example, Nobleton market has performed in the last 10 years differently than Toronto market.
Correct.
Or than Barrie, or than London, whatever city you look at. It's all different. And this exact same concept with the portfolios. Depending on what portfolio you're lended with, that's how it will look different in the next 5, 10 years.
Yeah.
Right. And there are other ways as well where people actually like to take the income out of their portfolio. We have those solutions as well where they actually religiously get paid every month.
Basically, dividends.
Yes, basically it's standard money. They get like standard amount. They get paid every single month, and that's how they can generate those income as well on top of whatever there. And generally, it works more for people who have slowed down in the working, people who are retired, and they need extra cushion on top of their retirement income.
Mm-hmm.
That really works very well for them as well.
That's great. If somebody wants to get a hold of you, Hem, how do they do that?
They can reach out to me on my cell, 416-580-0000. That's the best way, I always say that, to reach out to me. Or they can reach out to me to my email, which is my first name, HEM, dot my last name, BHATT, at primerica.com.
That's great. If anybody's listening to and you didn't get that all, if you want to send me a DM, send me an email, whatever you need to do to get in touch with him, I can pass on the information for him. This has been a wonderful episode to have you on the show again, Hem. You did a great job. Looking forward to having you for a third appearance because we have many different topics to talk about. Unfortunately, right now we're just running a little bit out of time, but it's been a pleasure and it's been a great show. Thanks for coming on.
Well, listen, it's been always a pleasure to deal with you and your entire team. They're all wonderful. And
Thank you.
I mean, I have dealt with them in past. I'm not new to you or your team. And it's always been pleasure for just to do any kind of interaction with you guys.
Thank you. Yeah, it's for us, it's a priority to make sure that we just take care of everybody and just do the right thing in life because everything else will come with that. And I truly believe in that.
100%.
Looking to buy or sell? Call a team you can trust. Don't believe me? Our Google reviews say it all. Put us on your lawn, your house will be gone. TheOPteam.com.